So big news in the MT5 marketplace world, but Mr. Pavel is back with a brand new expert advisor, the MultiWay EA. This video is sponsored by our free Golden Time Bomb expert advisor. Take your trading to the next level through automating the London breakout and the opening range breakout. Click the link in the description to download the EA completely for free. So Pavel is quite a famous developer, and he's already come up with some very popular EAs, including the Fast Way EA, the Little Crazy, and the Northeast Way MT5. All of his bots are more premium. They actually have a fairly sophisticated following, so people who know what they're doing. And he does tend to make more grid currency style bots, but of the ones in the marketplace, he does make some of the better ones. And because of that, he is quite popular, and there are quite a few people who like his bots. So he's not like, there are some fly-by-night developers, but there's also some guys like Bogdan as well, who make bots which are grids, we know they're grids, and they're very transparent about that, but at the same time, they do have a fan base, because if you like grid bots and you understand how to manage the risk, they can be something as part of a broader portfolio. The big issue with grids is if you don't know how to manage the risk, they can go boom. But for some types of traders who like this style of system, there is an application as part of a broader portfolio, particularly if you're managing risk intelligently. So here we can see that it's based on the mean reversion strategy with 9 different correlated currency pairs. There's the very classic grid martingale style pairs, which are Aussie New Zealand dollar, New Zealand CAD, Odd CAD. And there's also some more trending assets like the Euro USD, GBP USD, and even Euro GBP. The downside with that is all of these like USD denominated assets make for a far riskier style of grid system, because you can have some rather large impulses, which you have to be a bit careful with, because the US dollar and the US economy in general has so much news related to it that you can just have these big spikes in the value of the dollar, and that can oftentimes be the bane which causes some of these bots to go boom. You have to be a bit careful about that. Here it's saying that there's a highly flexible money management and risk control option, and in my mind that probably means that they have some sort of like equity stop loss in there to protect against massive drawdowns. And here he's saying that advanced volatility filter, so they have a few different, that's actually pretty interesting. So like pretty much they have filters so that if you're trading more of a trending pair, it will keep you out in the event that something is trending too much. And here it says a grid system is used but martingale is not. I'm curious what he means by that. Like, is it actually averaging in, or does it just add a ton of new positions at a comparable lot size? So I'd be curious to see that. And here he's saying that you can run the EA with default settings on one chart, or you can remove the symbol, list, and settings and launch the EA on 9 charts. Oh, he's saying don't. So either you can run it on one pair or on multiple pair, but don't run it on 9 different charts. Fair. I've had similar things with some of my bots with our Longbow Fund Manager, where people run a bot that can trade 3 pairs on 3 charts, and then you end up just taking 3 times the trades that you should. So glad that he is pointing that out. And here we can see that so far his results have been very good. He does have impressive live signals. One thing to note is that his initial deposit was tiny, and he put in a bunch of different deposits, and that usually means he came close to going boom a few times, and he had to essentially top it up. So that's what you will sometimes see with this type of system. But his max drawdown was only 27%, so nothing too crazy. And we are seeing a very long-term live signal. But this usually means with really small initial signal and lots of top-ups that maybe he had to kind of come to the rescue by topping up the margin a few times. But I digress. It looks like a pretty solid grid style system. There's also some different money management settings where you actually have, I believe, the ability to stop the drawdowns from getting too significant. So it is very much a grid system, but it looks to be quite a solid grid system. And here actually, he said it doesn't really matter what chart you run it on, but it has to be an M15 chart. So let's run that. I unfortunately ran it on the H1 kind of without looking the first time. But let's run it in here quickly and see what it looks like. And while it runs there, we can go through the inputs tab. So if we're using multi-currency, you can then essentially specify here, advanced market data from pavoludoservice.com. True, okay, that's neat. So like he gives you some potentially a news filter or market data filter from his website, which is quite cool. There's money management, there's grid, safe, okay, here we go. So safe exit mode, cut losses if long duration. So he does seem to have some sort of equity stop loss in here, which is good. And external restrictions, emergency mode. So emergency closing type, soft emergency, false. So this is some sort of like equity stop loss as well. And he has a time offset. So yeah, this makes sense to me. It's some sort of like, clearly we can see when we're running, there is a grid martingale going on or some sort of grid system because we have these large detachments between the equity and the balanced lines. Maybe he is hitting some sort of equity stop loss here too. It looks like that to me. But there are some settings, some safety settings in there which are preventing it from blowing up too badly. I ran it on the euro dollar here, and during this period of kind of like beginning of March, when we started to see a bit more volatility, it was more April when euro dollar bots were blowing because it was more Liberation Day. But this actually shows the successful use of an equity stop loss, which is good. So what we're seeing so far is it was doing really well. We were at around 12%. We hit the equity stop loss a few times, and now it's kind of slowly but surely making its way back up. And this is not quite a 1-year backtest. We're running it year to date, so that would be around 9 months as of today, and it made around an 8% return. So the main, and this is just running one pair. Like he will be running this on many pairs. I believe it is at least. Actually, no, pardon me. This is running on many pairs. And when he says it's not martingale, there is some degree of lot scaling happening here. Or maybe it's just due to the different asset value. Oh no, actually no, there is no lot scaling. Because it's all like the only changes we're seeing are due to the different currencies. And I see up 3-1. Well, buy, sell. But there is a little bit of lot scaling going on here too, actually. GBP CAD, so it goes from 0.3 to 0.7. Interesting. Okay, so now let's look at the graph here. What I can see, clearly it's a grid system of sorts, running multiple different currencies. There are many enhanced safety features in here, and that could be one of the reasons why it's been rather robust to date. But when he says no martingale, I think he's meaning that there's no aggressive lot scaling happening. I do think just by looking at some of the deals that there is perhaps a bit of modest lot scaling happening, but he's also entering with multiple different positions. So if we look at a big grid up here, like the majority of these trades have a constant lot size, but some of them it is increasing. So I think most likely he's entering in with multiple different positions, but he's not exactly, he's not always massively increasing the lot size. We can see here that it is indeed a mean reversion style system. There's a bit of data mismatch happening too, but clearly there's some sort of grid system going on, as you guys can see. So yeah, this is exactly what I expected. It's a grid system. There is some sort of recovery or averaging into losers going on, but he has very enhanced safety features to make that probably one of the better bots doing this style of system, which is good to see. And at the same time, he's a very well-trusted developer. There doesn't appear to be any funny business or history reading going on. So if you like this style of system, it could be one worth exploring. That being said, you have to be mindful of the risks and the downside to this. Like every style of bot has pros and cons. Like opening range breakouts have pros and cons, high risk reward bots have pros and cons, grid martingales have pros and cons. And I prefer to not have the risk of catastrophic blowing up, and instead just to lose and take frequent losers. Some people prefer to mostly always win and just occasionally blow up. So it really is teach their own, but you have to be mindful of what the pros and cons would be. So overall, looks like a very solidly developed bot, but there is always the inherent grid risk involved. So guys, hope you enjoyed the video. I'll see you in the next one.